Swimming like a shark in a shrimp tank. Big fish, small pond in the shrimp tank.
Double E helps individuals and companies navigate through the complex world of financial and insurance portfolios. The Shrimp Tank Charleston Show allows us the opportunity to interview and learn from the brightest entrepreneurs and leaders around. We hear their stories and discover what drove them to become so successful. We are a nationally syndicated podcast that can be heard and watched on YouTube, Google, Apple, Facebook, LinkedIn, Instagram, and Spotify. You can also tune in and subscribe to our shows on our website, shrimptankpodcast.com/Charleston, or check us out on the Double E website, www.double-ellc.com. Well, I'm very psyched. I'm very grateful to have the CEO, founder of one of the greatest banks in the world, Mr. Rick Saunders of First Reliance Bank, which I'm proud to say I'm a client and a very happy, and I'm part of your 98% customer satisfaction numbers. So I'm excited to hear all about Rick's journey and how he took this bank from basically, from a seed to this massive plant that it is today. So we're going to jump into that momentarily. I also want to just mention what a great year we had in 2022. We had some great, unbelievable shows, and if you didn't take advantage of some of those shows, such as Xavier McDaniel, the all-star NBA player, and Marcus Ogden, former NFL player, and Sean Elliott, coach of the Georgia State Panthers, Lori Lapine, Tanner Sutton of Free Fly Apparel. It just goes on and on. We had some phenomenal shows. So do check those out. If you didn't hear about those or see them or watch them last year, please check them out this year. So Rick, first, welcome.
Glad to be here.
I got to meet you. Let me start with this, because this to me was just one of the most classic moves that I've seen someone do in years. And I call it a 1%er move, which means 99% of people would never do this. So Rick is the CEO of First Reliance Bank, and I'll give you guys a little bio momentarily. But I ended up buying a building in Mount Pleasant, South Carolina, which is right outside of Charleston. And it's not, to me, it was nothing huge. It's not some major deal, but I worked with Mark Knight of First Reliance Bank, and I was working with some other banks, and everybody was jockeying for this business. And I ended up going with First Reliance because they provided the best service, the best deal, the best everything for me. And I get a phone call, I don't know, probably a week after closing on the loan from Rick, from you, telling me how much you appreciated my business. And guys, that is a 1%er move, where a CEO of a $1 billion plus bank is picking up the phone to call little old Eric Elkins to say thank you. Keep doing that, because it really made a difference on my perception of not only obviously you, but the bank. That's the kind of service and touch your bank does.
Well, thank you for saying that, Eric. It's interesting. I think banks all do the same thing, sell the same things. And I just learned a long time ago that if I can't find a way to position ourselves just to be a touch different, that all I have is price to yield on, and sometimes it's just difficult to do well in business if price is all you're leaning on.
Well, you guys don't just do price, and there's so much way beyond. Your staff has been so cordial, so helpful to my staff on so many things. Your technology gentleman picked up the phone after a meeting I had with Ben Brazel, and I was telling him something regarding your online technology that I was having an issue with, and the head of your tech calls me and wants to figure it out. So, guys, I'm going to give you I'll get in more about why you should be looking at more of these community and regional type of banks versus the Banks of America, the Wells Fargos of the world, because it's like for me, it was like I didn't realize what I've been missing. I basically was married to the most overweight woman in the world that didn't make any dinner for me, didn't do anything for me, and I just stayed with her. And then all of a sudden, First Reliance is this gorgeous woman that comes into my life and is like, I'll make you breakfast, lunch, and dinner and do all kinds of things for you. So it's been an amazing experience. But all right, enough about that. Let me talk about who is Rick Saunders. So, I mean, his bio is ridiculous. I can't even go through all this. It's too much to talk about. But in 1998, he started forming First Reliance Bank and now serves as the CEO of the bank. They have a roughly 200 plus employees. They're headquartered in Florence, not Italy, Florence, South Carolina, and beautiful city right in the center, kind of center near the coast of South Carolina. First Reliance has been named one of the best places to work for 15 consecutive years. I know you guys are passionate about that. You focus a lot on middle-income households as well as small business owners to mid-sized business owners. And your purpose as a bank is to make the lives of your customers better. And I can vouch that is definitely the case. You have done that. As I mentioned earlier, they have a 93% customer satisfaction ratio. To me, I would go, you're 100%. Then let's talk about Rick. Rick has a wife named Tiffany. I've not met her. I'm sure she's gorgeous. You guys obviously can tell that Rick, by his voice, is a very handsome man. And so or you can watch it on YouTube to see what I'm talking about. He's got two beautiful daughters, Reagan and Riley, and two sons, correct? Give me their names because my research crew screwed this up.
That's okay. So Chris, my oldest son, is the byproduct of my first marriage. And she and I were married 13 years. He was 8 or so when we divorced. He lived with me after the divorce, and a couple years later I married Tiffany, so she raised him half of his childhood life. And the girls is a long story. We can get into that if you like, but Reed is my 19-year-old who was a college at Charleston student, was not supposed to be, and according to the doctors, could never be. And he was born a month before we actually went and picked up Reagan, who we adopted from China.
Oh, wow. God, I just got another dog. I can't imagine having kids that close.
Yes. They were like twins, a year apart in age, but a month apart in the presence of our home.
Wow. All right, let me finish about this gentleman, and we're not, because I promise you, he's got so many accolades. It just goes on and on. But he's been appointed by the former governor of South Carolina, Mark Sanford, as to head the South Carolina Board of Financial Institutions. He got an order of Palmetto from Governor McMaster. How do I get an order of Palmetto? What do I got to do that?
I really don't know. I would assume that. I think there's two reasons why I think they recognize that with us. One is that we build a fairly large business in South Carolina, which makes an economic impact. But my time on the Board of Financial Institutions, which is a regulatory body that oversees safety and soundness in the banking space, I was real instrumental in transforming the direction of that organization and getting some energy around not just safety and soundness of banking, but why South Carolina banks were an economic driver to the South Carolina economy and what we need to do to protect our banks from consolidating with out-of-state banks. And so some of the focus has shifted, and I was involved with working with then Hugh Leatherman, who's since passed away.
Oh, yeah.
On making sure that our banking commissioners were well compensated, that we had the right staff and the right vision for that government agency. So I did a lot of work with the government on that. It's an 8-year appointment. Well, it's really a 4-year appointment, but if you do good enough, they let you stick around 8 years. But I was well in the process of this transformation. Nothing moves fast in government, so they gave me another 4. So I stuck around another 4. So I spent 12 years on that.
Oh, man. Yeah. Well, and you've been Entrepreneur of the Year, Ernest Young. I mean, I love your resume. Listen, if God forbid the bank gets rid of you, you'll be able to get a job. There won't be a problem with that.
I'm almost old enough that it would be okay.
All right, so let's go back because Rick, I do know a little bit about your story, but let's let our subscribers, the audience, know you grew up, were born in Sumter, raised in Timmonsville, South Carolina, small town.
Correct.
Didn't grow up with this wealth and money, correct?
Lower middle income.
Yeah. So I always like, because here's a guy who's super successful, guys. I mean, very mega. We don't have people who aren't on the show, but you come from this upbringing. What do you think kind of correlates on why that upbringing has made you who you are today?
Wow. I mean, how far you want me to go that far back?
Well, we only have an hour, so don't give me too long of an answer.
So I'll tell you that my father's father passed away when he was 14, and my father had to go to work to support his family. My father has always been a big believer that work ethic was the basic essential of life, and at 14 he put me to work. And
is your father still alive?
Oh yeah.
Really?
Yeah. I'll tell you the story about him in just a second. But he was a hard father. He was one of those guys that every time you crossed a milestone that he thought there was a bigger hill. So keep pushing. I was also one of those kids that if you told me I needed to turn left, that I was 100% turning right. I fought every element of my life growing up, so I never really followed the protocol. So I've always been one of those guys to break barriers. Sometimes there's a pretty negative consequence of that. Sometimes there's been a positive consequence of that. Which ultimately kind of got us to where we ended up in our careers, where we ended up working for a family bank that sold, and now you're with a bigger bank, and they say we're all going left, and I'm thinking left didn't sound good to me. Let's go right.
Is your brother with you at that bank too?
Yes.
So both of you go into banking?
So yes. So I'm a college dropout. And I ended up working for a finance company here in Charleston, actually. I was hired in Florence, moved to Charleston, had an amazing mentor who taught me everything I needed to know about lending money and customer service and being a responsible employee. My father taught me a good work ethic. And this guy was an aging executive for this finance company, and he said, I'm going to invest in you. And they ultimately wanted to move me to an out-of-state office to run, and he said, I think you're probably ought to be in banking. And my mother actually worked for this family bank in Timmonsville. And I said, well, if I'm going to be in banking, I think I want to go work for these guys. And Mrs. Scarborough, the Scarborough family that owned the bank, they owned 100% of the bank, said, yeah, okay, so I've got 6 people interviewing for the job. You're the only one without a college degree. Why in the world would I want to hire you? And my answer to him was, I don't know the other guys. I can't give you that answer about them. But what I can do is show up day one and do the job you want. But I'll do you a good enough job that I'll do the job for free for 6 months. And
really,
and if you like what I do, pay me in 6 months. And if you don't pay me. And I would just suggest you offer that to the other guys and see how confident they are, how confident they feel about their ability to do what I know I can do day one. And he hired me on the spot. And
how did you on that piece, on that strategy you just described, saying I'll work for free? Where did that come from? Are you getting guidance from your dad saying, or is that's just in you?
Intuition, I guess. I mean, I kind of knew. I felt really confident that outside of not having a college degree, that I could do what he needed me to do. I wanted the job bad enough. I did not want to go to Alabama. I had offers from 2 other banks too, but they were big corporate banks. I didn't want to work for a corporate bank. I knew this family. I knew the bank. My mother worked there. I had friends that worked there. I was confident this is kind of where I needed to land. And I was confident I could deliver. And I felt like, how am I going to position myself to be different enough that I can overcome this hurdle of not having a college degree?
And tell me about what happened in college. Like, what was the reason for dropping out, and where were you?
So I had a very monumental change in my life as a teenager. I was a very troubled teenager early. Alcohol and drugs and rebellion at the highest degree with parents. That's always one of those where I still am as a human being about the system. Rules are made to be altered, and if the rule doesn't sound right to me, I'm gonna find a way to alter it. So I guess part of that doesn't mean that my dad's rules were bad rules. It just means that as a child, I was always pushing boundaries, and 14-year-old boys don't need to be pushing boundaries to the level I pushed boundaries. But I was a pretty rough teenager. Well, I got involved in the church later as a teenager. My life changed directionally in how I felt about life. So I went to this private Christian high school, got out of the public school system, went to this smaller private Christian high school, and it really kind of changed about how I viewed myself and my behaviors. And they had convinced me that I should go to a private Christian college, which at the time I did not know. I didn't know what I wanted to do. I went there on a scholarship, on a football scholarship actually. Got injured, lost it, ended up getting my scholarship back because I couldn't afford to be there. In a singing group, I traveled the country for 2 years singing in an ensemble, mixed ensemble with these guys. It was an interesting story, but anyway. They were very, very fundamentally conservative. And again, I went back to that. These are really crazy rules. I'm so far apart from where you guys are on how I think people should behave.
And are you still partying like in college and stuff?
I'm
or
not.
you?
No, I'd settled down. But I mean, they were extreme, and I had migrated from extreme the other way to their extreme this way, and I was in the middle, and they were saying the middle's still not good enough. You need to come further this way. And I'm saying, it's not going to happen for me. So I didn't know what I wanted to do anyway, just knew I didn't need to be there, so I said, I'm not coming back. So I got out. And I sat home for the summer, didn't really know what I wanted to do, didn't enjoy college, had no career path, had no ambition. I'm floundering here. And I had a friend of mine say, there's a job opening at a finance company. Why don't you at least come work here until you figure out what you want to do? And I was there a week, and I said, I'm actually pretty good at this, and this is really fun work. I think I'm just going to figure out how to build my career around this.
Really?
Mm-hmm.
Who was that? Who was the guy who introduced you to that?
So he was a guy I went to high school with. He lives in Washington State now. They got him Rocky Melt, and nobody would ever know him. But
he's a huge listener of the show, so I mean, I
wondered. maybe so. He retired from the Navy. I don't ever see him. My brother talks to him more than I do. But anyway, he just said, you should come work here. I think you'd like it. And I was pretty good at it, and I just stuck with it. And I was one of those guys that, I got nothing to fall back on. My dad wasn't supporting me. It was, there were days I had nothing to eat, no money to eat. So it was, I better be really good at this, and I liked it, and I just stuck with it and never.
And then you just started moving up the ranks within the bank?
Within that finance company, yes. And then, of course, I went to work for the Scarborough family. And I just kind of made an effort of being the first one there and the last one to leave. And every project that they had going on, I volunteered to be part of the team. But at some point in time, I volunteered to be the leader of the team. And after 20 years with them, I was on their executive committee. I was on their board of directors. I ran most every division.
And how old are you when this is happening?
I was 22 when I went to work for them. I was 36 when they sold the company. So by 36, I was pretty much running a bank at the highest level, but it was a smaller community bank. It was not complicated, but I had worked every job inside a bank, and I had multiple offers, multiple times my salary to go work for other companies. And this is where I was really, I don't know that I put it together at the time, but it was where I really began to formulate in my head the importance of being happy where you are, being happy what you're doing, being aligned, your values being aligned with your company. Is more important than how much money you're making, and that money tends to work itself out. And these people will offer me 2 and 3 and sometimes 4 times what I was making, and I just said, no, I'm going to stay right here. And I probably would have never been able to ultimately end up starting a bank had I left.
And do you, I'm curious, when you look at today's environment with the way the workforce is in terms of the younger generations, and I have these conversations a lot with friends of mine, business owners, who are 50 years old and older, and I'm finding myself just like kind of like that old raggedy old dad type person where I'm like, we walk through the snow to get to school and blah blah blah, because everyone's complaining about nobody wants to work. Do you think that the same environment exists for these where you stayed with the bank, because to me that's really unusual now. Like most people at that age, in 22 to 30 to 35, they're ready. They're like, I'm taking the money, I'm getting out of here. There's very few that see it the way you saw it then.
Well, I would tell you that I think even then there were very few. I just think I was just a weird guy, right? I mean, I'm not one for a lot of personal change. Getting a divorce after 13 years was a hard thing for me.
How old were you when you divorced?
I was in my early 30s, probably mid-30s maybe.
I want to go there, if you don't mind, but we have sponsors, and I got to take a break. So bear with us. Guys, we're going to get into the juicy stuff. I always want to ask people about divorce, and especially with high energy, high driven, successful people. But we'll get into that after this break. You're enjoying another great episode of the Shrimp Tank Charleston. We'll be right back.
Attention. Do you own a whole life or universal life insurance policy? Were you told to expect a big tax-free nest egg at retirement, or that dividends will pay for the policy instead of you? Agents frequently sell products like this that are profitable for them, but not for you. Let Double E audit your policy at no cost. Call now to find out how Double E Insurance and Financial Solutions can help you. 843-936-6352. DoubleELLC.com. Securities offered through Fortune Financial Services, Inc., member FINRA SIPC. Elkins Financial, Double E LLC, and Fortune Financial Services, Inc. are separate entities.
Welcome back, guys, to the Shrimp Tank Charleston podcast. I'm your host, Eric Elkins, as well as founder of Double E Insurance and Financial Solutions. I use the Shrimp Tank Charleston platform to continue elevating and enhancing my life as well as our clients' lives, whether it's from networking or connecting our clients with our Shrimp Tank guests like Rick Saunders today, to opening doors for investment opportunities, or just learning from these overachievers. I mean, I'm really enjoying Rick's story. I can't wait to keep going with this. But if you would like to schedule a call with myself or one of our advisors to learn more about what we do at Double E, please reach out to us via email, info@double-E-LLC. That's info@doublellc.com. We want to serve you. All right, we're sitting here talking with Rick Saunders, CEO of First Reliance Bank. And before we went to break, Rick had mentioned that he had gotten divorced in his early 30s. And I'm always interested, Rick, about really successful guys that are trying to grow their career, and then I hear that they got divorced. And sometimes I always feel like there's something that has to give and take. And I'm curious, the divorce, if you don't mind talking about it, does it have anything to do with just the amount of drive and focus that you had at that time on work?
I would say that was a piece. There are people who enter your life. First off, let me back up and say that I qualify that divorce as the biggest failure of my entire life. I think there is no reason why people should fail in those kind of relationships. And I believe that success in life isn't defined by your job title. It's defined by all areas of your life, which include your personal self, your family, and your business, and your spiritual life. So I consider that a very large failure. But I would just say that it was an ingredient in a very tumultuous environment. I mean, we were toxic for each other from day one. We fought on our honeymoon night, and we fought for 13 years. And I would say that ever was a single human being that I brought the worst out in. I brought the worst out in her. She brought the worst out in me. And we were too young and too immature to understand how to navigate differences. And work was always a conversation because I was working, It
was like probably a relief for you to be at work.
Yeah, I would say so. It probably isn't the reason I worked hard. I was always motivated by my father's teachings of work ethic to be the best you can be when you show up. And And I guess I felt somewhat insecure about not having a college degree, about outworking everybody around me as well.
Yeah. Did you always kind of carry that chip on the shoulder?
Still do today.
And it's funny. I've had this conversation with other guys who dropped out, where there's like an insecurity that you don't have this degree, and to me, I don't give two shits if you have a degree.
Well, most social conversations always end up with some kind of content around where'd you go to school. And I tell people Palmetto Street, where I went to school. So yeah, so I consider my divorce a failure. What I learned from that is you need to be really, really careful about positioning yourself in relationships. And when you walk into situations where there is discontent and turmoil, that finding solutions to and common ground to that is more important than winning always. So I've also kind of came to the conclusion that balance. I hear young people talk about life balance. And I have to remind them and myself that there are points in time where your family demands more from you than your job, and your job will sometimes demand more from you than your family. And that balance is a representation of all of your stakeholders in your life feeling like they're getting from you what they need. And for myself, for instance, when we started the company, my wife and I sat down and I said, this is going to be a 100-hour-plus week deal, right? And she said, "Yes, I do." And
is that Tiffany?
Tiffany.
Okay.
Yeah, Tiffany.
When you started First
Reliance. We'd only
Reliance.
been married a year when I started. So when we got married, I built a house, and within the year I built a house, and I went to her and said, "By the way, I'm quitting my job and starting a bank." She said, "Do what?"
Because you're making good money.
Yeah.
You got a very stable, successful, pretty even keel life.
A good career, a good position, making a nice paycheck, and a nice home, and we're working on a family at this time. And I walk in and said, "By the way, we're going to have to lift out our savings account for a while because I'm going to start a company." And I don't know that the odds were even greater than 50% we could even get the bank off the ground. So once you kind of get out the industry and you stay quiet for a while, even getting back in is a challenge. So I took a really, really big chance that my career may just.
And were you just missing something in life with your professional life at that time where you're like, this? I mean, it's almost like this is too easy for me. I'm not getting.
No. You want to.
Yeah, I want to go into how you start First Reliance.
So the Scarborough family, an amazing, amazing family. Mrs. Scarborough just passed away recently. He was in his 90s, and his father started this bank. He ran it. His son came in, third generation, ran the bank.
And was successful.
Oh, yeah, they did.
Third scary.
Yeah. So I guess they came to a point where they felt like that, community banks were going to be challenged. They got a really nice offer, so, they sold. We found ourselves all of a sudden working for a really big company with a whole different way of doing business. And this is kind of one of those things, I guess, in time when I just mentioned earlier that I formulated in my head that there's a certain way people need to behave, that those behaviors need to be aligned with your family, or those values need to be aligned with your family or your workplace. And if your values doesn't mean that somebody else's values are bad. It's just if they're not the same, if you don't believe in the same things, you're going to have discontentment. And we woke up one day and they were saying, "We think employees and customers should be treated this way." And my brother and I were saying, "Nah, we think they should be this way." And he came to me, my brother and our friend Dale Porter came to me and said, "Let's start a bank." And I said, "Y'all have lost your mind. Zero chance I'm starting a bank. Zero." And they said, "Well, we can't do it without you. We got to get you sold on this." So,
and all three of you are at the same
bank. Yeah.
Brothers older or younger?
Younger. So actually, I hired him to come work for the Scarborough family, and he's a great banker, still a great banker. Our friend Dale Porter was more operational and finance. He was getting displaced in the merger. My brother and I had really good jobs. We were making a lot of money with them and performing very well too. It wasn't one of those kind of jobs that we're failing here, let's go find something else to do. We were killing it, actually. I mean, we were doing really, really good. But it was just there was something missing. Obviously, you wake up every day and you're not happy. I did not want to be one of those employees that quit and never left. So you get people that'll disconnect emotionally from a job, but they'll collect your paychecks. I didn't want to be that guy. So I was convinced I was going somewhere else to work. Starting a bank is not something I wanted to do. I mean, who does that? But my brother and our partner convinced me that it was the right thing to do. And I got to tell you that I would not want to do it again. It was not an ambition of mine. I did believe that there was a better way to do business, and I did think that I was going to have a hard time finding a place to land that I felt like I could be secure professionally, and they convinced me it was the right thing to do. So we embarked on this journey. Fortunately for us, we had this major event that took place, the sale of this local bank. And at the time, the regulators were pretty generous about issuing new charters and letting inexperienced people become CEOs of banks. And if you had a heartbeat and you had banker in your job description and you could raise a few dollars, you probably could get approved to open a bank back in those days.
Which would not, I'm assuming that's not the case today.
Very difficult today. But finding investor money for new banks is a challenge just because bank stocks never have really recovered from the Great Depression. So it's easier to invest in an operation like, say, ours that's got a good foundation and is making a good profit and getting it reasonably cheap pricing versus into a new bank that's going to lose 30% of its value because it's going to take 3 years to get up and make money. Now, the other side of that, too, is we've been in zero interest rates for quite some time, and it's hard as a new bank to make the kind of margins that you would need to give returns fast enough. That may change if rates stay up for a while. We may see more de novos get started. But, yeah, it is more difficult. Your resume has to be more robust, and you have to raise a lot more money now than you did then. And
so when you start the bank, you set up, you get a lease on a small building or something, and is it just how many employees when you open the door?
So we actually bought a place in Florence. We were going to construct the main office. In the rear of this, we put up a double wide trailer. And they're designed, they build trailers for bank offices. It's a temporary space. It's designed to house about 8 to 10 people. We opened up with 13. Before we left that office, 22 people working out.
Really?
Oh, yeah, it was unbelievable.
How much money did y'all have to invest initially in the first year just to get it up and running?
So we had to raise $7.5 million in capital to start the company. We were profitable in the first 6 months.
Really?
Which was at that time was one of the fastest profitable startup banks in the history of the FDIC.
Really?
Yeah, and the reason for that is that my brother and I had such a large following of clients. So we had been bankers for 2 decades. And I'd like to think the way our company and we provided service that, and both my brother and myself have a high fear of failure. And the high fear of failure doesn't restrict us, it motivates us. So we were really concerned. And the team we put together were all the people who had worked for me for those years.
So you got a lot of those guys that come over with you.
Yeah, everybody that we wanted came.
And you're also dealing in 1998, 99 where the stock market is on fire and people they got a lot of money.
We raised what would be probably a year to 2 to raise the equity. We did it in 60 days. And we were motivated to do it in 60 days because we were all living out of our personal savings. I mean, we were burning through our bank accounts pretty quick, obviously. So, when you knowing that I'm going to run out of money here pretty fast, I better get this done fast. We raised enough equity to open our company in 60 days, which was basically unheard of at the time. So, we asked for the charter in December of 1998, and we were open in August of 1999, which is unbelievable.
When you reflect back on that first year, is there anything in particular that you go, God, we made one of the things that really stressed us out or caused issue or where you were like, I should have seen that play coming at us, but we didn't. Anything come to mind?
Fortunately, we opened in a period where the economy was so good, it was almost impossible to mess up. And we were too young and too immature and really unqualified to open up a complicated company and do well. And you really just would have to be completely just unaware to have failed open up a startup bank in 1999. I mean, everybody. I mean, there were 850 banks in the country open up in that 2-year period that we opened up. There are only over 200 of them left, by the way. There were 15 in South Carolina. There are only 3 of us left standing.
Really? And like, what would be the, if you went and looked at 2022, how many banks were started in 22, would you think?
Well, so
in the country, if you had to pick a number.
5.
5 out of 800 and something? And
back then, yeah. It was a period of time, like I said, it was a lot of consolidation going on. The world was in a good place. Stock market was doing well. It was easy to raise capital. There were a lot of bankers getting displaced because of consolidation, and the regulators were determined that they wanted more community banks, and they just gave everybody charters. Now, when 2008 came along, there was a consequence of that because there were a lot of people that didn't need to be leading banks that ultimately aren't here anymore. But which is some of the reason why it's very rare that banks are designed and built for the payday. Most people think, well, you start a community bank, you're going to sell it in a couple of years, and everybody's going to make a lot of money. That's very, very rare that people do it for that reason. There are some. But most of the time, why community banks ultimately end up selling is they make a huge mistake, like you run into a 2008 recession, or you just hit a wall, an economic wall. I can't grow the company. The shareholders I got all I can get out of this for the shareholders. There's just no talent or whatever the things are. It's just too complicated past the management that's there to continue to lever the company. And then you exit. My wish is that we continue to grow the company and that I can narrow the gap between what we trade for and what I could sell the company for, right?
And so you guys are on the
we trade on the pink sheets over the counter.
Okay, so you're on the over the counter. Is one of the goals to get on the nationals
so you want to get on NASDAQ and the Russell Index just because you create more liquidity for your investors, and with more liquidity comes better returns for the shareholders. You can get in and out, and we get better trading multiples because people are paying attention to what you're doing. When you're on the pink sheets, nobody pays attention, so you typically have lower trading to earnings, or lower trading multiples to earnings, or lower trading multiple to tangible book value. Which at some point in time, you got to be fair, you got to say either I got to get large enough to get on the Russell or get on the NASDAQ so that the shareholders get paid, or you have to sell. And this is ultimately one of the reasons why banks get out of the game, is because getting there is hard.
Why is it that I know you obviously you're not seeing the trend as much as we used to, but you see a lot of wealthy folks get involved as partners and get involved into starting a bank. And I would say, let's just say over the last 15 years, it was almost like people, very successful guys, girls would go and, it's either I'm going to plane or I'm starting a bank. Mm-hmm. And they don't necessarily work there. They just, what's so glamorous because your margins aren't that great unless I'm missing something.
So banking is a volume business, not a margin business, although everybody lives on margin. But our gross margins on the very best of days would be 4% gross. And 4% margin, no business would want to survive on 4% margin, right? Which is another reason why you can't make a lot of mistakes when you're lending it out. And the way banks are deposit machines. And I'm get back to your question. Banks are in the business to take deposits and to allow people to have access to those deposits to do whatever they want to do. So we're a transaction-oriented business that says, I'm going to put money in your company, and then I want it when I need it. And most of that is in checking accounts. Sometimes it's in savings, and then sometimes in time deposits, which were different instruments. We take those deposit dollars, and we invest them. Sometimes it's in overnight investments. Sometimes it's in treasury bonds, and most of the time it's in loans. So you don't have a lot of opportunity to make a mistake when people say, well, getting a loan from you is very challenging sometimes. Well, we want to make sure we don't make a mistake, right? Because when you're working on a 4% gross margin, you don't have the opportunity to. By the time I spend 2.5% of that, 50% of that to pay for staffing and buildings, and another 1% of that set aside for credit costs, and only 1%, so a quarter of it's available for shareholders, which is still only 1% of the total asset return. So it's very difficult. So we're a volume business. So the reason why I think people get involved is that it's a very profitable business. If it's well run, that there's consistent, steady revenue coming in. So we're almost like an annuity in the banking business, right? So I tell my doctor friends who are all very genius guys, I said, if you don't have your hands inside somebody's body operating on them, you're not making any money. I can go play golf, and so we're still making money because it's an annuity, right? So people got loans, the interest is accruing, and it's paying. Now I got to know how to run it, manage it, and lead it. But it's an annuity business that has a pretty consistent revenue stream that you can depend on.
Does this economic situation that we're somewhat in today and potentially going to move into, especially if the labor market starts to show some unemployment and slow down, does that keep you guys up right now at night?
It does. So I'll finish the last question. I wanted to make sure I said this because I think it's important people understand is that why people do that. There are two reasons. One is that I want to make money, which I think is a smaller reason than most people ultimately find value in the economic benefits of a community bank in your community. We represent about 95% of all the banks in the country, but only manage about 10% of the deposit dollars. But we make about 70% of all small business loans in the country. So when you got 90% of the deposit dollars managed by the big guys, but we're still doing 70% of all the small business loans, that's a strong economic cog to have in your community. So good business people who are very philanthropic understand that community banks, while they are a for-profit machine, are still a very philanthropic contribution to the local community. So I think that's a big reason why people do it. Now, back to what we're seeing and where we're going with the economy. Yes. If you ask 10 economists what they think will happen, you probably will get 10 different answers. I've been doing this over 40 years now, and anytime you get in a situation where you got hyperinflation, and not that never have seen this much debt in terms of the U.S. debt. I don't know what the long-term consequences of that are going to be, but and just the economic consequences of hyperinflation, whatever the drivers of those inflation are, when you have to raise rates as fast as they're raising rates, there is going to be some calamity on the other side of that. They're going to soften the labor markets. They're going to push unemployment up. They're going to soften the real estate market. You can already see what they've done to the financial markets, right? I mean, equity prices have pulled back. Rising rates has been good for banking because our margins have widened, but the deposit deltas, the cost of the funding, are going to start coming, so we're going to see margin compression again. But you'll see that if you invest in financials at all, you would see that the banking stocks have probably retreated some for two reasons. One is that the investors are thinking margins are going to get squeezed again on the other side of this rising rate component. But everybody's bracing for a credit event, some kind of credit event. If the world softens, if unemployment goes up, what do you need to do to position yourself? And what's that going to do to your shareholders' investment if credit costs start going up? So this idea that I said, I know you don't get much opportunity to make a mistake when you make a credit decision, those are in normal times. What you can't predict is what have I done in normal times if the world starts coming against me in terms of pockets of geographic concentrations, lending types. Am I lending money in speculative spaces that run higher risk of going in default if the world softened? Am I a heavy consumer lender that if unemployment goes up, am I going to see more defaults? And what are those costs and how are they imposed on the institution? So yeah, I keep telling my guys I feel like I'm going to get throat punched. I just don't know where it's coming from. And you try to talk to as many smart people as you can and get their opinions, and you try to formulate your own opinions through instinct and intuition and experience. And sometimes you're right, sometimes you're not. I got a lot of gray hair. My guys tell me sometimes my gray hair gets in the way of progress, that I'm probably looking for too many landmines, but I stepped on a few.
Well, but I would say to those guys, hey guys, I've had a pretty good ride here, and so
I think they respect my opinions, but I like the fact that I have a team smart enough to say, let's talk about alternatives. But yeah, we're not completely bracing. We're just very conscientious about where the world is.
So basically, what I just heard is what you know is what is basically you don't know.
Correct. And I try to tell my friends and clients to be cautious, keep liquidity as much as you can, and don't over-lever right now. Let's just see where this thing lands, because I think we'll know in 12 months where it's going to land.
Well, great. I just bought this building. Okay, guys, you're listening to the Shrimp Tank Charleston podcast. We're going to take a quick break, but we'll be right back. We're going to get into some of the subscriber questions with Rick, and then we're going to kind of conclude and see what the future is for Rick and First Reliance Bank. We'll be right back.
If you're like most successful business executives, you would probably rather stick your arm in a bucket of snakes than formulate a strategy for your insurance and financial needs. Who even understands estate planning, 401k plans, or key men insurance? We do. We are Double E, your virtual chief insurance and financial officer. Let us free you up to do more of what you do best and less of what we do better. Call 843-936-6352. DoubleELLC.com. Securities offered through Fortune Financial Services, Inc., member FINRA SIPC. Elkins Financial Double E LLC and Fortune Financial Services, Inc. are separate entities.
Welcome back, and thank you for tuning in to the Shrimp Tank Charleston Show. I'm your host, Eric Elkins. We've been sitting here having a great, informative conversation with Rick Saunders, CEO of First Reliance Bank, in the Double E studios. And you're educating me a bunch on a couple of key points that I want to just summarize. One, a lot of things that I've kind of taken from this conversation with you today, Rick, is work ethic. You do things different than 99% of the people out there do, and that's a good thing. I'm always telling our folks that I work with is be a 1%er. Don't be like everybody else, because that's not going to be as successful. Be uncomfortable. You're a risk taker. You've been a risk taker, and it's worked out for you. And then you've stayed really focused, it sounds to me, with your culture and your purpose as huge main drivers for the bank. Not only for the bank from a professional standpoint and driving home with that, but also then seeing it personally too. That's kind of what I've gathered. To quickly summarize what I've learned from you, and I'm very grateful for that, because sometimes we forget things and we take things for granted, and we look at money first versus is this part of our purpose? Is this what we really want to go after, or are we just trying to go after cash real quick? So, guys, take a lesson from someone like Rick, who's been super successful. And he doesn't give himself enough credit about starting a bank, in the sense that you say that, anybody probably would have been successful back then. I disagree. You and it sounds like your brother have a gift, and you've been fortunate, and you realize this stuff doesn't come to you immediately. And that's one of the hardest things that I always deal with younger employees, is they look at my life and they go, I can be that. And then I'm like, yeah, this was hard. I'm like, this did not happen overnight. This was hell for years. But anything you want to elaborate on what?
Well, I would tell you that this is going to sound odd, because most people don't really grasp this. I've spent a lot of time thinking about it over the years. But I make more money today than I did 40 years ago. And I've never made a dime more that brought me a dime's worth more of happiness. Money gives you options. Sometimes the options are negative as well. So it never has been about money for me. Even when people offered to pay me more when I worked for the Scarborough family, it was never about money. It was always about, am I happy where I'm at? Am I getting fulfilled where I'm at? Am I learning and growing where I'm at? And I've always learned that there's always a competitor with a better price, and there's always a competitor willing to take your employees for a higher salary, and there's always somewhere I could go work and make more money. So I've tried to build an organization, and the fundamentals of our strategy have kind of always been, I want to build a great place to work so that people are motivated to come be part of the team and are here for so much bigger reason than the paycheck that it would be difficult to leave, that the workplace was such an amazing place that you just would not have the threat of people bouncing out of here all the time. But they were so engaged in what we were doing that the next leg of that strategy has always been, I want to have a great place to bank. So that the customer, when they came, the experience was so amazing that they weren't always trying to shop the best price. And I always tell people there's a big, big difference between the best price and the best deal. And anytime you begin to commoditize what you do, there's always somebody that's going to do it cheaper or pay more. I want to pay a fair wage, and I want to earn a fair revenue from my clients, but I want to provide enough value to both of those that their lives are better because they affiliate with our organization. And if we can do that well, I think we can maintain and earn our independence and be around for a long time. And I show up every day because I want people's lives to change in a positive way because I was part of it. And that's why I wake up every day. And I think the purpose of our organization has always been changing lives. And banking is about changing lives if done the right way. And you can go online and you can apply for a car loan and you can get it, and you can get it at a cheap rate. But you have access to a banker that cares, is accessible, and has enough experience to give you solid advice when you need it. Those things make a difference, and they're worth something. And that's the kind of company I wanted to build. And
you have, because I can tell you every experience I've had with First Reliance has been what you just described. So, all right, enough about how great First Reliance and how great you are, Rick. I mean, I'm tired of listening to how beautiful and great you are. No, I'm joking. All right, let's take here's some questions from some of our subscribers. And we have subscribers from all over the world. Today, they're all over the U.S., okay? First one's from Amy Barber, lives in Bozeman, Montana, writes, Rick, what is the difference between a bank and a credit union?
Well, a bank has investors, and a credit union has members. A credit union is a not-for-profit organization that does basic banking transactions for the people in its common bond. The credit unions have always kind of been, the banks have kind of always been anti-credit unions because we pay 35% in taxes and the credit unions don't pay taxes. And it always worked okay as long as the teachers had a credit union that took care of teachers. That common bond is kind of gravitated into, if you live in a community where there are teachers, you can come be a member of a credit union. So the banks have always...
Yeah, like I can go be a member, right?
So there are some inconsistencies as to how they operate, we think. But they have a purpose, and there's a good place for them. And inside their boundaries, they do good things. And so, typically a credit union can pay you more for your deposits and charge you less for your loans because they aren't paying corporate income taxes on anything. So they are a tax-free, nonprofit entity. We believe in banking that if they stay in their space and in their lane, there's probably a place for them. But getting out of that lane and moving into our space is unfair competition because we don't have we have to pay taxes. So you can go get a good car loan, you can get a home loan, you can make a good deposit with them, and you can become a member. But we try very diligently in banking to make sure they stay in their space.
So, but are they is a credit union doing typically millions and $1 million real estate loans? Like, are they doing? Are they getting in that too? So
they try real hard to get into the commercial lending space. There's a very narrow, and I don't know exactly where the rules are, but there's a very narrow window of space they can play in there. And the bankers have done a pretty good job of making sure that in terms of just managing their risk and their expertise so that we keep them in the consumer space primarily. But you can do some commercial banking with them, but it's really limited.
Got it. Great question, Amy. And thank you for being a loyal subscriber. Adam Motion from Highland Park, Illinois writes, Rick, I'm a developer primarily in the Midwest. Do you have any recommendations moving forward if we do go into a recession on getting banks to approve solid deals? So any secret sauces that you would recommend for guys who are like Adam, who are developers who are looking for loans?
So historically, developers are the types of clients that are transactional focused and will go to any bank that will get them a deal at the best price. I would just tell you one is that I would build 1 or 2 or 3 really solid banking relationships. Find out who the lenders are in your area who are good at development lending and go build relationships with them. And don't try to make sure you beat them up on pricing every time you turn around. Build solid relationships. Have a good plan. Go to them with a good plan. Even go to them before you build your plan and talk through their thoughts on what they see and what they're feeling. But my best advice would be don't be a rate shopper. Don't be a bank shopper. Find you a couple of good bankers that are good development lenders and go build really good relationships with them.
Don't do the short-term route.
No.
Build the long-term.
Right.
Justin Schlifkin from Atlanta, Georgia writes, Rick, I've always had interest in putting a group together and forming a bank. If you were forming a bank in today's environment, what would be the 2 or 3 things that you would focus your energy on? Or would you just say, Justin, just don't start a bank? Kill his dreams.
Well, so I would say that starting a bank 2 years ago, I would tell you be careful because in zero interest rate environments or close to zero interest rate environments, getting enough margin without taking a lot of front end credit risk would be your time from nothing to profitability would have been extremely long, and it would have been very hard to demonstrate to your potential investors that there was a place there to make a good return. Right now, I would tell you that if rates stay high for long, it probably won't be a bad time to consider thinking about starting a bank on the other side of whatever's going to happen in the next 12 months. I don't know that I would jump right in on the front end of what could be a serious recession. It could be that it's a bump in the road and everything is okay. I would want probably an event to happen, and by saying event, I mean maybe a banker that has a solid reputation with a big following of staff and a big following of customers, or maybe 1 or 2 of the smaller community banks in the area have recently sold, where you could get your balance sheet blown up as quick as you possibly can. And there's a story to tell that says on the front end of this, we can get to profitability quickly. It is hard, and I got friends who raise equity for startup community banks, and it is hard to raise equity right now for community banks.
So hopefully, Justin, your dream is here, so take advantage of it. But what I just heard Rick say is you better find the right human capital to help you get it going that has a good backlog to bring with him or her.
Absolutely.
All right, so in conclusion, Rick, you've been a fantastic guest. I can't thank you enough. I can't thank you enough for the relationship that Ben Brazel, Mark Knight, yourself, that have helped my business and helped me with getting this office space that I bought, and also I know he recently left, but he's a friend too. Is Rick? Robert Dozier. I grew up with Robert, so you obviously pick great people to be at First Reliance, and the bank is amazing. And if you are one of these people that is with Bank of America, Wells Fargo, these mega banks, and you are fat and lazy about making a switch, I promise you will be shocked how much love and respect you'll get from a First Reliance bank beyond. these local community banks. It's night and day, and it's really night and day with these guys at First Reliance. So I can't say enough about them. It's a great bank. Check them out. These guys got locations. You guys got locations all over South Carolina.
We do.
Are you in North Carolina?
A little bit. We're in North Charlotte and Winston-Salem.
And so tell me, in conclusion, what does First Reliance look like in 5 years, and what does Rick Saunders look like in 5 years?
Well, every day I wake up, and I've been doing this for almost 24 years with this company. I am as determined today as I was the day we started it, that this never has been about the payday. It's always been about a legacy business that will forever, past me, continue to make a difference in people's lives. That's hard to do. It's hard to earn your independence in community bank space because at some point in time, people run out of patience, people run out of talent, the economy turns a different direction. So it's always that risk that you can't. But if you followed our company, you will see that even in the last 2 years, I've completely retooled the executive leadership, and it was just a perfect storm in banking in South Carolina that allowed me to pick up some of the best talent in South Carolina for bankers. So I got a lot of breath left in us at this point to continue to be that bank that continues to earn its independence. So I get asked all the time what I consider selling the company, and it's just not even an option. So I want to continue to build a bank that can survive my leadership. In 5 years, I think I've still got lots of ideas, and I still got some risk-taking in me. I still got a lot of energy. I'd like to still be involved in the organization. If it's not CEO at some level on the board or chairman, but I have no ambitions at this point to go sit on the porch. I get excited every day about what we do. And because I got so many smart people working for me, I'm probably more energized today than I was 20 years ago when it was just us trying to figure it out.
I'm curious, what is in the banking, in the regional community banking world, what is the multiple of these buyouts? Is it based on EBITDA, and is it 6, 10, 15? What's the multiple today?
So the multiple changes, but it's always a product of earnings per share or some product of your tangible equity value. So generally, you're looking at banks our size typically would be sold at some multiple of tangible value. So we traded at about 120 to our tangible value. I could sell the company today, and like I said, it ebbs and flows based on where the economy is. But in a good period, $1 billion bank in South Carolina could probably get 180 to 2 times tangible value. So it's a big jump there, right? So we have to look at this as what do my forward earnings look like? How much am I going to grow earnings? And is the gap between that going to start narrowing? And if the shareholders say, we'd like our community bank, we want our community bank, and you can demonstrate that you're going to continue to narrow that gap, then let's stay independent, stay in the game instead of selling to a big company and just ruining what we've built for 20 years.
Well, if you're thinking about buying First Reliance, it doesn't sound like he's got a great strategy, just going with I'm not selling. But I don't think I think Rick is true to his word. He has zero interest in that, which is great because he's got the purpose to keep growing this thing and changing lives. Rick, thank you so much for being on the show. You were a great guest. I look forward to doing more great things with you and First Reliance. I hope everybody enjoyed this episode with Rick Saunders, CEO of First Reliance Bank. Please check out our previous episodes on various podcast channels as well, YouTube, Apple, Spotify, all those things. You can go under your search menu and type in The Shrimp Tank Charleston. The Shrimp Tank Charleston. That is 4 words when you type in under the search. And you can watch the actual interview that we just did with Rick, as well as other guests such as Eric Bland regarding the Murdaugh murders and Xavier McDaniel and all those guys on YouTube, and hear their stories as well. Or you can go to our website, shrimptankpodcast.com/Charleston, and become a subscriber, fan, or maybe a guest. If you or your company would like to schedule a call with Double E to discuss performing an audit of your insurance, financial, retirement portfolios for your business as well as for you individually, please email us at info@double EELLC.com. Lastly, if you think you know of someone that is an entrepreneur or leader like a Rick Saunders, making an impact in our community and our world, then please contact our producer, Kristen Kilman, at KK@DOUBLEELLC.com. Rick doesn't realize he won't be able to go out for dinner anymore. There'll be millions of fans asking you for your autograph. Your life changes. I don't go anywhere now because of this show. I'm Eric Elkins. Focus on being a one percenter. You know what a one percenter is? It's someone that does the little things, the uncomfortable and riskier things in life. Thank you, and I'm so grateful to all of you for listening to the Shrimp Tank Charleston.
I've been feeling like a shark in a shrimp tank. Big fish, small pond in the shrimp tank.
Welcome to the Shrimp Tank Charleston Show. I'm your host, Eric Elkins, but in real life, I'm an entrepreneur and founder of Double E Insurance and Financial Solutions. Double E helps individuals and companies navigate through their financial insurance portfolios. Double E provides clients an entertaining and unique experience. The Shrimp Tank Charleston Show allows us the opportunity to interview and learn from the brightest entrepreneurs and leaders around. We dive into their journey and discover what drove them to become so successful. We will make sure we get out of them not only the wins, but also the losses that they have had on their journey. We are a nationally syndicated podcast that can be heard and watched on YouTube, Google, Apple, Facebook, LinkedIn, Instagram, Spotify, and iHeartRadio. You can also tune in and subscribe to our shows on our website, shrimptankpodcast.com/Charleston, or check us out on the Double E website, EELLC.com.